Welcome back to my channel. Today I'm going to review the Boson Protocol. For those who are unfamiliar with my channel, what I do is I do research, I feed it into a model, the model has an output, I weigh that model to reality, I reflect and modify the model to reflect higher ROI opportunities in the cryptocurrency space. This is the model, the project is Boson Protocol, and I'm going to dive directly into it. So whenever I address a project, I always start off with what problem or market does this project solve? What service provided is there exactly? For this one, it is real-world assets represented on blockchains through contracts. That is, just real-world items like cars, shirts, whatever, represented as contracts that exist as NFTs. That can be in metaverse, or could be traded, that can be used, etc. So that's whatever your imagination would be, that's what it would do. So we have the Boson Protocol, and it basically does real-world assets to NFTs. It's the mediation protocol for the real-world assets using trustless smart contracts, game theories to ensure buyers and sellers have mediation between themselves, to where where most of the time these contracts will work as expected. They're tokenized promises to deliver, and it uses promise theory assessment representations. I'm not going to dive too much into how that works, but this is going to be a brief overview of generally how it works. So you have a buyer and a seller, and you're going to have this NFT IOU. It's the rights to the item. It's potential in the metaverse. Like this NFT IOU can be, it's just entitlement to the item to get the item shipped. The seller puts up collateral and it has a reputation to establish some kind of confidence for the buyer. If everything doesn't turn out, like the buyer doesn't get the item, or if there's some kind of breakup in how things unfold, then the collateral can be given to the buyer, and he might even get some free money out of the exchange. So there's an incentive for the seller to follow through, because he would lose his collateral and gain nothing out of it. So there's this game theory based in putting up collateral for a transaction to take place. And they can also have reputation. So the reputation plus the collateral can help establish the preliminary needs for these NFT IOUs. And they're, at the degree of escrow contracts with the Boson Protocol. And it has a dispute resolution mediation process if things rise up the ranks of dispute resolution. The beginning is the mutual resolution, which is signed by both, and it uses this series of game theories in order to reach a resolution. And it could be escalated. There's escalated resolution that goes more and more into game theories. And finally, it ends up where it will go to some indifferent third actor. And that third actor could be specified beforehand in the NFT, so the buyer can know where things are going to be resolved. It could be like Walmart or whoever the seller puts as the indifferent third party, and the buyer could be, okay, that's good. Or, they could even choose, who knows. But that's the kind of thing that helps these NFTs represent real-world items. That just gives you a general idea. It's just using game theory to allow for NFTs that represent real-world items. The token, what is the token used for? So the Boson Protocol is going to be one of the collateral components of these exchanges, but it's also control of the protocol. It is governance. It exists as an ERC20 on the Ethereum mainnet. And the governance protocol goes as discussion for 7 days. They vote and then implement protocols. And I'll get more in the details in the model on how the model looks, or how the governance model looks for this project. And there's some other things here that I'll get to in as well. But that's just a general overview of the project and what it does, what it serves, what market it tries to solve, etc. So I'm going to go ahead and just dive right into the model on whether or not we can expect this to be a high ROI project. Now I'm going to start doing things a little differently. I'm going to just use purple to purple out things so I know what has been covered, and I'm not going to cover things so that people could read it after I do it. Okay, so neutral for future increase in demand for the token, future price FOMO, neutral estimation for that. Major upcoming events, the timeline, the roadmap is expected to come out soon. I read through their Telegram, and that's what I could find. Now, we're in a bear market, so we're gonna have great all the projects in crypto have great metrics for wanting to buy in. This is the time to really buy in the crypto. Look, crypto can go lower, but all the metrics that say weekends or how, like, who's in the market, like, no one is here anymore when this video is made who's into the hype. Like, crypto is pretty much a dead industry to the people who don't understand it. So this is the great time to get into projects in general. So you're going to see green on this component of the review. And what we're seeing is the Twitter followers are neutral. So we're not under any hype there. And you can see the Telegram users dropping. So this is the kind of things, this is when we want to enter a project. Because in general, all the cryptos kind of move together. And so we're seeing that this is not under any hype right now. And that's when you would want to enter a project. So that's green metrics. Regarding the token model, I put green. It is entitled to cash flows because it has fees to the DAO treasury. The DAO treasury is run by governance. Therefore, it has a PDE, and however they decide to do that, they can burn it, they can give it back to token holders, or send it to initiatives for the organization. So this is like a typical organization where the token is entitled to the cash flows through a PDE of whatever fees are received through the protocol. So that means that if they get adoption, the token should benefit from that. We are at ICO prices. Once again, recent price action numbers for the model. Green across the board for many different cryptos. We're in a bear market. This video is coming out, I think, pretty close to the bottom. We could be 50% down from here, who knows? But you're going to see on my videos lately, all green on the price metric values, because we are in a max fear part of this. And like, for instance, this project is at ICO prices. The people who funded this project gave them about $37 million. The market cap is roughly $37 million, even a little less. So that means it's priced at ICO prices, and there's many projects like that, a lot of opportunities to get in crypto. So you just see green there. So yeah, it's a low market cap project. Now, okay, regarding governance, one of the things that I didn't like about governance was there was no time component to governance. There was no time wait. One of the strongest things I think that a project can do to increase the strength of governance is to give more weight to votes for people who lock up their tokens. So that means you can get a voter attack if you don't have the tokens locked up, because so let's say you have a competitor, they could buy your tokens for a short period of time, make a vote on something, and then sell the tokens and roughly damage your protocol. What you want is someone who's in this network for the long run, so they can lock up the tokens for, let's say, 6 years, and they'd get 6 times as many votes, etc. That's the type of thing I'm saying here. The only other project that I'm aware of that does that is Polkadot in general. But that is one of the most important things. And in this project particular, that would have been something that would have helped strengthen the governance, in my opinion. That's why I put this as neutral. It would have helped with the mechanisms of quality, etc. Regarding how decentralized it is, it's a medium in decentralization. It exists on the Ethereum protocol. However, the tokens are going to be concentrated towards those founders. And so you're going to see more of the token concentration towards that. And thus, it's that's where the power is going to be until the tokens are distributed, and there's this distributed effort with things. But right now, obviously, at the stage that this project's in, it would be more towards medium to low with decentralization. And it doesn't matter if something's really lowly decentralized if it does real well with its cash flows, and if the token's titled to that cash flow. So there's that. So I'm just going to say governance, pretty neutral. On that, good enough to function. I'll leave it at that. So regarding all these are just the developer components. Do we expect development to continue? There is a DAO treasury. So as this thing gets rolling, we would expect, if it's making revenues, to pay developers, because there's that they're on-chain DAO. So yes, I would expect development to continue. Now, I don't see a moat protecting this protocol. So the strength of this protocol, what it really offers, what is the bottom line here? It's the value of like blockchains usually have ledgers that are expensive and they offer contextual arrangements. But for this one, it's going to be getting its fees through the NFT service provided. So you're going to want to see a lot of transactions with that. And I don't really, I don't know if there would be much of a moat unless it's, it's in the Ethereum ecosystem. So like, I don't see something protecting that. Like maybe like another protocol could copy it, but I don't know. Like it's difficult for me to say that it's a highly moat protected business model. If they were if they had contracts with like, let's say big time metaverse companies, that would be strong. But I put neutral for these things because I don't see it right now. At what stage of development it is in, but it could get a moat in the future. But I'll just leave that at that. All right, network effect. I put, green, somewhat healthy. User experience to get better. I expect that to be the case. Value of services provided to increase. All these things are pretty well structured for the governance to get those things. So strategic partnerships and backers, they have a relationship with the World Economic Forum, or the World Economic Forum said some nice statements about them. One of the CEO had a interview with Trent McConley, who spoke very highly of Boson Protocol, and that's the Chief Technical Officer of Boson Protocol, so I know he's a pretty legitimate actor. That's a pretty good vouch right there. So, they have decent backers, etc., from that angle, validating their experience. I saw Singapore and London, so that's probably where most of the team is located. The CEO is Justin Bannon, and Gregor Bazera is also a founder. For the team, once again, mostly neutral. I didn't see any billion-dollar startups, any home runs really in their history. So I just put that as neutral. All right, so large business models that demand the token to reflect their needs. I didn't see anything super strong about the token economics for that. Basically, the token is used for governance. I would like to see stronger models, like for creating business demand. But the token, it's basically like shares of a company, because it's entitled to those PDEs, it's governance, it represents the protocol. But I don't see a reason why large businesses would want to buy and hold these tokens, other than to be a typical fund manager allocating to a business. Or maybe they would want governance for their business models. That is possible. Like if I was a business with running NFT storefront, if I was running an NFT storefront of real world items, then maybe I would want to accumulate their tokens. So something like that could happen. But, once again, I just think the stage of this is a little early for that. So I put neutral for all these things with the running of the token model, like price, FOMO, etc. at this stage of the game. Now, here's one of the reasons there's a lot of neutral things coming out of here, is because there's no liquidity depth for this. And if for this protocol to be effective, you need people who can buy and sell the token, or mostly sell the token. If the token is used for, these are the uses of the token: incentives, entitlement to value growth, fee, all this governance components. But mostly these, this is what I was going to talk about getting into later. You need liquidity. You need liquidity for these things to work. You need liquidity for fees to work, for incentives to work, for entitlement to value growth to work, because you need people to exit the protocol as well as enter the protocol. And it has, as of right now, very low liquidity. It had like 1/3,000th of the market cap in liquidity. It was like nothing. So to me, that means there's no exponential growth. There's no adoption yet. And that's why I put neutral for all these things. Of course, this is priced that way because it is a low market cap project. We're talking about a project that is 20 million, it's a low market cap project. So it's got that low price to go along with that low adoption. So it could be a home run in that sense. But that's the reason why there's caution here, is because that means there's no adoption yet without that liquidity. Liquidity, in many cases, is the fuel for a project to be able to thrive. All right. Finally, is a token used for services and governance? So this is the question of whether the token is really tied to that growth metrics, and it is. The token is tied to the growth of this. If this is successful, the token should do well because it is tied to the PDE, it is governance. It gets that fees to the DAO decision-making, so that means the token is tied to growth. Value of the target market. So this is the value of that target market, who they're after. Basically, as you know, in this interview, particularly with the Boson Protocol with Trent McConley, he was saying the same kind of things I say. All the world's bandwidth, $400 trillion in assets moving into the blockchain space. It's a typical story. Very large market size. Crypto right now. This is why crypto is a huge opportunity. All of the crypto right now is 800 billion. Now, if it gets cut in half, like if crypto gets cut in half from here, it'd be 400 billion. So 400 billion to 400 trillion, right? That's where crypto is going to be. And it's probably going to do that in its 10 to 20 years, right? So that is 1,000x for all of crypto. It means if you have an index of crypto, if crypto halves from here, that means it's 1,000x for almost risk-free for anyone who understands this, because this technology is going to eat all the world. And that's the reason why it has these hype cycles, because crypto is going to eat the world. And so that's the size of the market. So, whether this particular project captures that is yet to be seen, but that is the size of the target market. So obviously very large, and obviously contributing to this project because it goes after that. All right, that's the model. It's the model output being neutral. Just a general summary. Pros, it is a large target market, as many cryptos are. It has a small market cap. There's no hype, as many other crypto projects have, and it's at VC prices. This is a time you would want to enter projects in general. The cons, it's too early for the metaverse. So one of the biggest targets for this project is the metaverse. And that's the reason Facebook or Meta is being hit so hard as well in a general sense, because where I personally think the metaverse is, some people think it's 10 years away. I think that's delusional. The metaverse is probably, it could be 10 years away. But where I personally track technology, and one of the technologies I've been observing is VR and where we are with that. And there's something called a Vario headset. And that Vario headset is perfect resolution technology. And it's about $4,000 for that headset. And using typical progress of technology laws, where, the hardware / software, we can expect that 4,000 is going to be 2,000 in 2 years and 1,000 in 4 years, because this is roughly how things go. So in 4 years, we're going to have perfect resolution headsets. I think that's about the time that the metaverse is going to start taking off. And you will need projects like this when you need projects to manage the metaverse, to bring NFTs. But even so, this bringing real world assets into the metaverse. So it's a small sliver of what that metaverse would be. That's why I would put, it's a little too early. That's my assessment with that. All right, I went off on a tangent there. And it's got no adoption yet, because of that liquidity needing to be there. Governance, wait to lock up. Oh, and yeah, so another thing is, like I said, with that governance component, with the time lock, wait to vote, if an exchange has a lot of these tokens, a centralized exchange, they can vote on the behalf of their holders. And I've seen that kill projects before, so that's why I said that was a dangerous thing. You want time lockups so that the exchanges are kind of have their feet held to the fire. The more that people get out of centralized exchanges, the healthier crypto will be. That's just the way it is. And that'll contribute to the health of this project too. It's got very low liquidity. Okay, so that's something I already said. All right, so that is my general summary. The next thing I'm going to do is go over my Patreon exclusive content, my personal decisions, my personal assessment, but this is the general overview. If you kind of like this content, please like and subscribe, and I'll see you guys next time, and I'm going to go talk to those patrons right now.